Hello investors and traders. This video will explain the technical indicator on balance volume, OBV. On balance volume, OBV is a technical trading momentum indicator that uses volume flow to predict changes in stock price. Joseph Granville first developed the OBV metric in the 1963 book Granville's New Key to Stock Market Profits. Granville believed that volume was the key behind markets and designed OBV to project when major moves in the markets would occur based on volume changes. In his book, he described the predictions generated by OBV as a spring being wound tightly. He believes that when volume increases sharply without a significant change in the stock price, the price will eventually jump upward or fall downward. On balance volume, OBV is a technical indicator of momentum using volume changes to make price predictions. OBV shows crowd sentiment that can predict a bullish or bearish outcome. Comparing relative actions between price bars and OBV generates more actionable signals than the green or red volume histograms commonly found at the bottom of a price charts. Unbalanced volume indicator strategy explained. Unbalanced volume indicator helps understand the trade pressure through volumes. Changes in volumes can be used as a leading indicator of stock price variations. The change could be in volume amount or volume trend. Investors use the unbalanced volume strategy to analyze a stock's unbalance to detect a trend of increasing trading volume. This trend can be detected much before the rise in stock prices. Similarly, a falling volume trend indicates a consequent fall in stock price. The OBV metric was introduced by Joseph Granville in 1963. According to Granville, when the stock price is relatively flat and the volume begins to increase or decrease, markedly greater amounts of trading pressure, buying or selling, would lead to sharp price move, either upside or downside. When a stock price continues to rise but the unbalanced volume indicator begins to decline, it indicates a subsequent fall in the stock buying momentum. Very soon, the stock price will hit its peak and start a downward trajectory. It is plotted on a price chart, but the individual quantitative value remains irrelevant. The indicator is cumulative. The time interval is constant with a starting point. The OBV real value arbitrarily depends on the start date. Instead, analysts study the nature of OBV movements over time. The OBV slope line carries all the analysis weight. Analysts track large and institutional investors by accessing the OBV volume numbers. Investors treat volume and price differences to showcase smart money and purchases against incorrect prevailing trends. The unbalanced volume formula is similar to accumulation distribution line. Both are momentum indicators that predict money movements by studying volume. The formula. You should know the basics of the formula and how the number is calculated, but all charting systems and all softwares will give you the OBV. The unbalanced value formula depends on different scenarios. If the present day asset's closing price is greater than the previous day closing price, OBV equal previous OBV plus today's volume. When the asset's closing equals the previous day closing price, OBV equal previous OBV plus 0. When the asset's closing price is less than the previous day's closing price, OBV equal previous OBV minus today's volume. What does unbalanced volume tell you? The theory behind OBV is based on the distinction between smart money, namely institutional investors, and less sophisticated retail investors. As mutual funds and pension funds begin to buy an issue that retail investors are selling, volume may increase as the price remains relatively level. Eventually, volume drives the price upwards. At that point, larger investors begin to sell and smaller investors begin buying. Despite being plotted on a price chart and measured numerically, the actual individual quantitative value of OBV is not relevant. The indicator itself is cumulative, while the time interval remains fixed by a dedicated starting point, meaning the real number value OB3 arbitrarily depends on the start date. Instead, traders and analysts look to the nature of OBV movements over time. The slope of the OBV line carries all the weight of analysis. Analysts look to the volume numbers on the OBV to track large institutional investors. They treat divergences between volume and price as a synonym of relationship between smart money and desperate masters hoping to showcase opportunities for buying against incorrect prevailing trends. For example, institutional money may drive up the price of an asset, then sell after other investors jump on the bandwagon. Is on-balance volume a good indicator? Since OBV is a leading indicator, it may produce forecasts, but looking at the bigger picture, no investor can comment on what happened in terms of signals. Therefore, there is room for false positive and misinterpretation. This can be potentially balancing lagging indicators. The difference between OBV and the accumulation distribution. On-balance volume and the accumulation distribution line are similar in that they are both momentum indicators that use volume to predict movement of smart money. However, this is where the similarities end. In this case, on-balance volume is calculated by summing the volume on an up day and subtracting the volume on a down day. The formula used to create the accumulation distribution line is quite different than the OBV shown above. The formula for accumulation distribution, without getting too complicated, is that it uses the position of the current price relative to its recent trading range and multiples it by a period volume. Limitations of the OBV. One limitation of the OBV is that it is a leading indicator, meaning it may produce predictions, but there is little it can say about what is actually happening in terms of signals it produces. Because of this, it is prone to produce false signals. It can therefore be balanced by lagging indicators and a moving average line to the OBV to look for an OBV line breakouts. You can confirm a breakout in this price if the OBV indicator makes a concurrent breakout. Another note of caution in using OBV is a large spike in volume on a single day can throw off the indicator for quite a while. For instance, a surprise earning announcement being added or removed from an index or massive institutional block trades can cause the indicator to spike or plummet, but the spike in volume may not be indicative of a trend. How accurate is on-balance volume? OBV provides fair feedback on major highs and lows and is very useful in measuring the breakout and breakdown potentials. In addition, it predicts a bearish divergence depending on the rally. What is a high on balance volume referred to? A high OBV indicates a positive volume pressure looking forward to higher prices. Likewise, decreasing OBV refers to a negative volume pressure anticipating lower prices. The OBV is a rising trend when each new peak is higher than the previous peak and each new trough is higher than the previous trough. Likewise, the OBV in a falling trend when each successive peak is lower than the previous peak and each successive trough is lower than the previous trough. When the OBV is moving sideways, it is not making successive highs and lows. It is a doubtful trend. Once in a trend, it is established, it remains in force until it is broken. There are two ways in which the OBV trend can be broken. The first occurs when the trend changes from a rising trend to a falling trend, or from a falling trend to a rising trend. The second way, the OBV trend can be broken as if the trend changes to a doubtful trend and remains doubtful for more than 3 days. Thus, if the security changes from the rising trend to a doubtful trend and remains doubtful for only 2 days before changing back to a rising trend, the OBV is considered to have always been in a rising trend. When the OBV changes to a rising or falling trend, a breakout has occurred. Since OBV breakouts normally precede price breakouts, investors should be buy long and OBV upside breakouts. Likewise, investors should sell short when the OBV makes a downside breakout. Positions should be held until the trend changes. This method of analyzing on-balance volume is designed for trading short-term cycles. According to Granville, investors must be quickly and decisively if they wish to profit from short-term OBV analysis. As usual, one indicator does not make a system, but combining the OBV with many other indicators can give you a weight of evidence of how to make decisions on the macro, to the sectors, to the individual securities. OBV is a very, very good indicator. And of course, volume is very important. especially on breakouts. So the OBV On Balance Volume, we highly recommend it, and you know the catchphrase. Study it, analyze it, adapt it. Peace.